Insurance professionals work hard every day to keep people safe. But as technology transforms the industry, how can insurers protect not only their clients, but also themselves from ever-changing cyber risks? My name's Elizabeth Blosfield, and I'm the host of the Insuring Cyber Podcast, a bi-monthly look into how the world of cyber and the business of insurance are connected. Hello, everyone, and welcome back to the Insuring Cyber Podcast. On today's episode, I'm speaking with Jason Ott, president of Aon Private Risk Management, and Diane Delaney, executive director of the Private Risk Management Association. We're discussing the biggest cyber risks faced by high net worth individuals and how insurers can help navigate them. So let's check out what they had to say. Hi, everybody. I'm here today with Jason Ott, president of Aon Private Risk Management. Hi, Jason. How are you?
Hi, I'm doing really well.
Yeah, thanks for taking the time to be here. And I'm also here with Diane Delaney, executive director of the Private Risk Management Association. Hi, Diane. How are you doing?
I'm doing good. How are you?
I'm doing well, thanks.
Okay.
Yeah, thank you both for taking the time to do this conversation. I know that we've spoken in the past, and it's really great to see you both again. And, I'm looking forward to talking about high net worth and how it relates to cyber insurance. Before we get into some of the questions, I was wondering if you could just give a brief overview of your backgrounds and some of the work that you do. So, Jason, I'll start with you.
Sure. So I'm the president of Aon Private Risk Management. I've been with Aon for almost 20 years, and in the industry, the high net worth personal insurance industry, for 23 years. I've always been with insurance. I've always been focusing on serving the needs of high net worth clients, successful individuals, and accomplished families.
That's great. Well, it's always great to talk to you, Jason. I'm glad that you're here today because I know you have perfect background for this conversation. And as do you, Diane. So could you give a little bit of an introduction of your background and some of the work you do as well?
Sure. So I oversee the Private Risk Management Association. About 20 years in the industry, primarily focused on high net worth. And a big part of my background and focus has been working with independent agents and brokers and carriers on uplifting the category of working and servicing high net worth individuals and families. So very focused on the education portion of this.
That's great. Well, I'm really looking forward to this discussion, and it's great to see you again as well, Diane. And then kind of starting off to sort of big picture overview, I was wondering if you could talk about, from your perspective, what are some of the most critical cyber threats for high net worth clients right now?
Yeah, I can jump in here. I think we see this in two areas right now for high net worth individuals. One is social engineering scams. So this is where scammers will really manipulate individuals into sharing confidential or personal information. And that typically happens through the phishing or the baiting where these attackers are going to impersonate trusted figures within their life. And because these high net worth individuals are such big public profiles out there, they're more susceptible to this. The second one, and what we're seeing a lot of, is where it comes down to the electronic funds transfer. So this is one of a more common type of cybercrime where these fraudulent transactions are happening. Criminals have the ability to gain access to personal and business accounts, and they're intercepting these funds and really changing where the transfers are going. And I'd say those are probably some of the two bigger areas that we've seen in our space.
Well, and I'll add the issue with, if I can, I think the issue with both of those is that from an insurance perspective, is it a cyber issue or is it a crime issue? So a lot of times it depends on how the event occurred, in whose system it occurred. So sometimes we might have coverage in place for someone, but it's the wrong kind of coverage. It's not the coverage that will respond because it might not be their cyber incident. It could be someone else's, and then it's crime. So we run into an issue of sometimes something happens, and even though we think they're protected, we might not have the right coverage in place.
Yeah, that's a really interesting point. And thank you both for that overview of some of the risks. I remember we had lunch, Jason, and we discussed, that topic. And I think that's an interesting thing to point out, whether it's cyber or crime coverage. And kind of on the back of that discussion about some of the risks, I'm curious, what are the best avenues, I guess, for high net worth clients to obtain cyber coverage?
Yeah, great question. Thank you. There are many avenues. So first, a lot of our clients think that they are fully covered through their credit card. A lot of credit cards do have some added coverage, or you can purchase some. Those are good, but they don't always cover everything. Then there are endorsements that can be added on to a homeowner's policy. So this is true with the broad insurance market, but specifically if you're looking at the high net worth segment, and I'm thinking like Private Client Select, Chubb, Cincinnati, Berkeley One, Pure, companies that are in that group, they've got some really broad endorsements that can be added on to a homeowner's policy. And the limits can range pretty dramatically from 100,000 up to $1 million. And in some cases, you can get 2 million. There's a lot more underwriting that's involved with those, but there are higher limits available. And then there are some standalone policies out there as well. Tokyo Marine has a really good one that I'm thinking of. So, but with all of those, there are differences. Some of them offer a broad range of coverage that covers social engineering, phishing, ransomware, all of those things. And some of them are just more like identity theft protection, and it gets you access to someone who will help restore your life after an event has happened, but it doesn't actually cover a financial loss. So there's a broad range. So when you're looking at this as a consumer, you want to have a conversation with your broker to really understand what's covered, because there's so many different options out there.
Yeah, that makes sense. And that's so important for, clients to understand where their blind spots are and where they, need coverage the most, and to kind of work with their brokers, as you mentioned. And then I'm curious, on the other side of it, on the side of the insurer, are there any sort of blind spots or gaps that insurance providers might have when it comes to addressing some of these cyber vulnerabilities that they need to, be aware of?
Yeah, and Jason and I were just talking about this as well. But, there's a lot of ambiguity in these cyber incidents involving high net worth families. And it's often a challenge to determine if the event is strictly business related, is it personal, is a combination of both. And that can happen quite often. But when we look at commercial policies, they don't provide coverage for personal cyber risks for executives and their families. So there needs to be a clearer definition in the policy coverage to address this blend of cyber threats, which we'll probably only see more of in the future.
Yeah, and I think that's a great point, Diane, because I can imagine, especially in the high net worth space, that the personal and the business side of it are often, you often have both. If a client is running a business out of their home or maybe working from home or whatever the situation is. So I think that's a good point to bring up. And I'm also curious if there are any unique risk factors tied to sort of the lifestyles or the business operations of high net worth clients. I know that many of them might have a higher profile public presence, or at least their business would. And I'm curious if cyber coverage addresses those unique risk factors as well.
Absolutely. There absolutely is a propensity for attacks to happen to high net worth individuals because of their public profiles. There are bad actors out there who will get into someone's system, their computer, and they will watch for months. They will gather data and they will strike when they think it's the right time. And because high net worth individuals are so public, a lot of times these are individuals who sit on boards, they are in the C-suite of companies, they are celebrities, entertainers, they're doing a lot of things out in the public. And part of who they are is having a public profile. That's part of what makes them so special, is that. So that absolutely makes them vulnerable, because every time they put something out there in the world, whether it's on social media or someone reports on something about them, it could be about stock that they've received. There's a lot of things that go into the public record. It's all out there to be consumed, and bad actors are going to take that information and they are going to specifically target those clients. I can also think of situations where clients who have beautiful, lovely homes take pictures within their homes, and it might capture things that are going on in their household. So just those things being out there, being available for consumption, do lead to bad actors wanting to attack them. So that is a big part of it.
Yeah. And I can imagine it's an important thing to be aware of, for anyone, but especially in the high net worth space, as you said, you're taking pictures in your home, or, we're so connected with technology these days that you're sharing a lot more than you probably think you are. So I think that's an important thing for everybody to be aware of. And I know that cyber insurance itself is still always evolving as a product. And I'm curious what trends or shifts you've observed in the high net worth space over the past 5 years.
Looking back, social engineering was not covered, and it's still not covered by some policies. So a trend that we're seeing is social engineering is getting pulled to the front, because that's what we're seeing happen. We're in phishing scams. We are seeing lots of clients have a financial impact due to that. So the industry is changing and they're responding and they're saying, okay, there is a need. Here's what it is. The good thing is now we have data. It's not a good thing for our clients, but there are claims that have been covered. So the insurance carriers are getting better at figuring out how to price for those changes, and offering coverage that meets our clients where they are. Personally, I think we need higher limits. A lot of times you might only be able to get $100,000 and our clients are saying, I have $100,000 deductible on my home. That's really not going to cut it. I need $1 million or $2 million or $5 million. And then it depends with the insurance carrier that they're with, whether you can get those higher limits or whether you go find a standalone policy. So, the limits are creeping up. There's broader coverage that's starting to be available. So those are some trends that I am seeing over the last 5 years where we've seen differences in the coverage and we've seen it evolve. And I'm excited about that. I think we're going to continue to see it evolve.
And even to add to that, Jason, it's a good point. I think what we're seeing in terms of the proactive advice and risk management tips that are being provided to these high net worth clients to make sure they're kind of limiting that exposure and those common best practices. So I think we've definitely seen an increase in the education there as well.
Yeah, and that education piece is so important too. And I agree with both of you. It is interesting to see how things have continued to evolve, and it'll be, good to see where they go in the future. And I know we already touched on this next question, so I might be repeating myself, but I was curious about some common coverage gaps or limitations of policies that insurers should be aware of for cyber in the high net worth space. Did either of you have anything else to add about that?
I did. I recently had a conversation with a cyber expert at one of the carriers that Jason had mentioned, and I had asked the same exact question. And she said what they're seeing a lot of is, when scams are voluntary, meaning the victim willingly transfers funds just based on the deceptive information, that's excluded from most policies. Not all policies. There's one policy that I'm aware of right now where that's not excluded, but there's been a lot of cases. And the broker that was on the line with us during that call had shared a situation where his client had voluntarily transferred funds, and it was a lot of money, and was told that they had no coverage for it. And I think many are not aware until the time that happens of like, well, I just didn't know. Like, how was I supposed to know? But you did it. You clicked the button and sent the funds.
I'll add on to that, Diane. I am familiar with a situation where a client had a contractor that was doing work. Someone had gotten into the contractor's system, had been watching, and sent a fraudulent invoice to our client. And then our client paid it because it looked real. It looked exactly like every invoice that they had ever received. That was a cyber incident, but it wasn't hers. And she was the one who voluntarily sent that. But how was she to know? In that particular case, we had a fraud safeguard endorsement. We had some crime coverage that covered that client because we weren't sure if we were going to be able to recover it from the third party that, where the actual event happened. And so they were able to be made whole. Now that was very unique. We were very lucky that we had that crime coverage in place. That's very rare. That's not always the case. So I think that there's a gap, or there's a hole there where people need to understand what they have.
Yeah, absolutely. And thank you both for sharing those examples. I think those are such important situations to be aware of. And it goes back to what you were saying about, is it cyber? Is it crime, Jason? And also what you were saying, Diane, about the importance of the education piece of it, clients making sure they understand their coverage fully, before they get into a situation like that. And then I'm also curious, because I know the cyber market is evolving all the time. So how can insurers kind of stay on top of balancing offering robust coverage that can make their clients whole, as you both just discussed, while also sort of managing some of the underwriting challenges of keeping up with cyber risk?
And I think the way to look at this, Elizabeth, is we can look at the coverages and the underwriting as well, but I think what is going to make the carrier really stand out, but also support the insured more, is through that cyber incident response teams, where that should go hand in hand with the coverages that they're offering. So these teams are designed to manage the stress and provide the resources. God forbid one of these events or threats do happen. And in speaking to some of these cyber experts in the industry, they say that having that resources from a carrier standpoint is some of the biggest differentiators for these high net worth clients, and something that shouldn't be overlooked.
Diane, you're right. While sometimes that coverage won't cover the financial loss that happened to the client, it's going to put them back into the best place that they can be afterwards, which is really important. That's a very, very, very important distinction. I think another thing that we're seeing is some carriers actually mandate that clients enroll in a credit monitoring program, which is a great risk management strategy for both parties to keep the insurance company protected, but also to keep the client protected and safe as well, because then they've got a vested interest in it as well. I know it can be annoying to have to change that when you're making major purchases, and our clients do make a lot of major purchases, but I think that's okay. I think that clients are willing to have that minor inconvenience to not have the larger threats hit them.
Yeah, I think those are great points that you both mentioned. And it's true, Jason, you get those in the mail from time to time and kind of roll your eyes at them like another, thing I have to sign up for. But it's so much more important than you might realize. So that's a great point. And I know that you're both doing really great work in this space. And we sort of dove right into, the cyber questions, but I want to talk about you and the work you're doing for a minute. So Diane, I know at PRMA, sorry about that. It's known for sort of empowering insurance professionals and educating them, as you mentioned earlier. So I'm curious what the most important skills or knowledge areas are for insurers to sort of develop within this high net worth space, or what can they continue to work on?
Yeah, and that's a great question, Elizabeth. And in all of the education that we're offering, and what we're really drilling down is, we are risk managers in this space. And you may have a title of an insurance producer or an insurance broker, but at the end of the day, we are all risk managers. And we have to be more consultative with our clients. But just saying that isn't enough. It's understanding what that means. What we really try and enforce through the education is, you have to get a full picture of the individual and their family's lifestyle. And it's not just understanding the lifestyle, but it's understanding what keeps them up at night and what's most important for them to protect. In the midst of catastrophic events, how do they want their insurance companies to respond on their behalf? And taking a step back as the insurance advisor and not just recommending what you think they need. It's a balance of making those recommendations, but also building it around what the homeowner or the high net worth individual is saying is keeping them up at night and where their concerns really lie. And that's some of the biggest parts of the education that we try and drill home.
Yeah, I love that approach. It's such a collaborative effort between the insurer and their client. And those conversations are so important. And then Jason, I know that you have a lot of experience leading a large team at Aon. And so I'm curious what strategies you found most effective in sort of training and mentoring professionals to serve the high net worth space.
It goes back to what Diane was speaking about, education. The coverage that's being offered does change, and it's changed rapidly over the last 5 years, where it really started off as just identity theft protection, and it's evolving to be true protection for cyber events. So keeping on top of those trends, making sure that we're talking about what's being offered, in which states it's being offered. A carrier might roll it out, but their new coverage offering is only in New York and Florida. It's going to take a year for it to catch up to the rest of those states. So you have to be on top of those little details. But another piece I want to add in is connecting our clients with professionals that can help from a risk management standpoint. So we're not cyber experts, but there are lots of really great firms out there that specialize in this. So we have a lot of family office clients or individuals that are in the C-suite that have engaged a third-party firm to take a look at their systems that they've got in place. And these firms will look at everything from, if they can, if it's appropriate, if it's a private business, from the business, so the family office, what they have in place, to what the family has in place in their homes, to which devices their kids and grandkids are using, then which devices within their home are IoT, that are the Internet of Things, that are connected to the internet, and they put protection in place for the clients from their systems, from a system standpoint, but then also they'll do training. They'll do social media training with the family to show them, these are things you should and should not do with your phone. They'll also make sure that they're set up with a VPN wherever they are. There are lots of little things you can do. Now, that comes at a great cost. I mean, you were probably talking about an investment of at least $10,000, but high net worth clients have a lot to lose and they see the value in this. So what we see is people will reach out, will put the cyber coverage in place, and at the same time, we'll connect them with a third party who can do that risk assessment for them and put those guardrails in place so that they're not just relying on the insurance. They've also got real risk management there to help them.
Yeah, that's great. I can imagine that's highly valuable and totally worth the cost. As we talk about a lot on this podcast, the cost of a cyber breach, if it occurs, would be way more. And that sounds like such comprehensive training, especially the social media piece of it. There's so much that we're sharing online, as we discussed earlier. So that's great. And, I'm curious, I know we talked earlier about the credit monitoring and some of these things that feel, kind of, another thing to sign up for, kind of, annoying, but are so important. So I'm curious how insurers can kind of better communicate the value of cyber insurance and some of these risk management practices to their high net worth clients. If they find them, overly complex or unnecessary, how can insurers better educate them on these things?
I think it's a lot around changing the thought process of these individuals. First and foremost, due to their success, they are going to be bigger targets for this. And highlighting that alone, I think, is really important. The second part of that is time and convenience. Like, if I was a part of a cyber attack, I wouldn't even know where to begin. And I think asking these type of questions to them, or pushing in that standpoint of just imagining them in this situation and how they would like their insurance company to support them through this time, is really an important way for them to think about, I need this, as opposed to just saying, here's the coverages and what it costs.
Yeah. And I think that's a great point, Diane, because you're right. Even if you take the time, do the training, understand all the pieces, in the moment, I can imagine it's so stressful. You might not know where to begin. And to have that protection already in place is so valuable.
Exactly.
Sorry, go ahead, Jason.
Could I add to that too?
Yeah.
So we find so many times that we offer the coverage and it's not taken up. On the business side, it absolutely is. I know businesses are addressing this. Aon has a huge cyber team. A lot of insurance brokerages out there have a huge cyber team. They are growing. I know it's a growing space, but in personal lines, we're selling it, but not a lot of it. And in fact, we recently surveyed some of our top clients, and it came up as one of the things that keeps them up at night. They are worried about cyber. But then I look at that group of clients that the survey was sent to. It was an anonymous survey, but not a lot of them actually have the cyber coverage that's out there. So we need to keep talking about it. We need to keep educating our clients. And this can't just be something that we offer 1 year and then we don't follow up with it. It has to be year after year. Unfortunately, what I find is most of our clients end up taking it or wanting to get coverage after an event has happened. And then it's too late.
Yeah. And that's so important. We need to close those gaps because, it's the same thing with natural disasters. It's kind of, you buy it every year. You don't always need it. But then as soon as something happens, you don't want to be without it. So I think that's so important. And as you mentioned, it's important to keep having these conversations. So we're going to talk more about cyber risk. I know it's not everybody's favorite topic, but we talked about it at the beginning. And now I'm curious what sort of emerging risks, like AI-driven cyber attacks, should insurers be sort of preparing to address with their clients, and what should clients kind of be looking out for?
This was a big discussion, Elizabeth, at the PRMA annual summit at the end of last year. And we had a whole cyber panel on this discussion. And this was a common question that came up from the attendees in the audience. And a lot of what we were hearing was the emergence around cryptocurrency risk. It is excluded from most policies, not all. You might be able to find some out there, but with the increasing integration in cryptocurrency into the personal asset portfolios of these high net worth clients, there's also a lot of increase in the cryptocurrency related fraud. And there's that big gap there. And it's something that we have to have our eye on in the industry as really these cyber attacks start to develop more.
I think you hit the nail on the head there. I also think it is simply AI-driven cyber attacks, and we don't know what they're going to look like. That is something that, unfortunately, I think is coming. and we need to be prepared. But the only way you can be prepared is if you've got a risk management plan and you've got coverage.
Yeah, exactly. Great points. And, with this technology constantly evolving, I can imagine the risks are changing all the time. So it's important to have coverage in place and to keep up with it. And I'm curious also how you see regulatory developments or some of these global cyber events that have been happening sort of shaping the way that insurers are approaching cyber insurance for high net worth, or if that will change their approach in the future.
From a regulatory standpoint, in the US, I don't know that I'm seeing a lot or things that are really meaningful. And I worry that what it's going to take to drive change would be a major attack to happen in the US. And that would be incredibly unfortunate. But right now, I feel we live in a bubble where it can't happen to us. It certainly is happening to other countries. It's happening to businesses, local municipalities, but not yet to individuals on a wide scale basis. Then my other concern is that if something happens, the coverage, the availability of the coverage there'll be a moratorium. It'll dry up. The need will be there, but the insurance carriers will be paying out the claims that they have, but they'll also need to take time to reassess what the damage was, how big of an event it was, and then are they appropriately priced? And is it sustainable for them to continue offering coverage? So when the need happens, it'll be difficult to get the coverage that you need. So I'm more worried that it's going to take a major event for us to really think that this is actually something that we really need to be considering and be concerned with.
Yeah, that is a big concern. And, we don't want to develop a sense of immunity to these things. So I think it is important, as we've said over and over, to keep educating. And thank you both for the work that you're doing to educate, insurers and their clients about the importance of cyber insurance. I know you've both been so generous with your time, and we're coming to the end of this episode. But my final question for both of you is just, where do you see the industry sort of heading in terms of its approach to cyber risks for high net worth?
I think Jason alluded to this before, but he said more risk management. And I think while we push risk management in areas such as safeguarding our homes, we're going to see more and more of that when it comes to cyber. We don't know what we don't know, but what we are aware of is that these cyber crimes are happening at such an increasing rate. And with AI coming into the mix, it's scary. But I do see the industry providing more risk management advice and consultative approach there to support these high net worth individuals.
And I mentioned earlier, the coverage is evolving. The coverage is getting better and more robust. I would love to see higher limits being offered, or really kind of juicy limits for our clients, $5-10 million. I'd love to see it be a blend of crime and cyber together. I think that's what our clients want. That's what they expect, but we don't have that solution yet. So I would love to see the industry evolve into offering something like that.
Yeah, that's great. Well, thank you both for those perspectives, and it'll definitely be interesting to see where things go. I'm sure there's a lot more we could talk about, and hopefully we'll get a chance to revisit this conversation. But thank you both for taking the time today.